The Prime Minister has set out a plan for spending cuts and tax increases. Do you think that this should be enough to reassure investors?
Yes, I think so. As you rightly said, France has an issue of a large public debt and too large a public deficit. And we are tackling the issue, I believe, very seriously. The plan is a plan of 44 billion euro of savings and revenue increases. 44 billion euro that will bring our deficit below the 5% threshold next year to 4.6%, and we are aiming at a deficit below 3% in 2029. If I can give three numbers to, yes, the 44 billion is mainly, yes?
Sorry, Minister, finish your point.
I'm listening. Yes, the bulk of the plan is to cut public spending. There are 30 billion of savings of cuts in the public spending, whether for the state or the social security, which is absolutely important but manageable. There will be 10% of revenue increases and 4 billion more because French people will have to work more, 2 days more because we will cut 2 banking holidays next year and the years after. So it's a very serious plan, 44 billion euro.
Okay, and you think that this is enough to reassure investors. What about getting the support of all of the lawmakers in France? Because that seems to be very difficult. You'll need the support of a number of parties. Which parties are you going to talk to try and get support here? Are the socialists at the top of your list? Because I think the far right and the far left have already found serious problems with this budget plan.
Well, first, let me remind you that with the same Parliament, we had an approval for the 2025 budget, which is currently being implemented, which is already a budget which is a very serious budget, bringing down the deficit. We will talk to all parties, because it is an issue of national interest. We believe it is the best interest of France to put its public finance right before the next presidential election of 2027. And we will talk to all parties. Having said that, the first reaction of opposition parties is quite normal because it's a huge plan, so the first reaction is negative. We will explain, we will discuss, we will improve the plan, and obviously there are probably more possibilities to reach an approval with the Socialist Party. They are still a party in the opposition, but they allowed the budget to pass for 2025. And if we have a fair discussion with them, and we will have a fair discussion with the Socialist Party, hopefully they can support the government for the budget. But again, we will talk to all parties, and we hope to have a wider support because, again, it's an issue of national interest.
Eric, good morning. Part of the plan is to raise revenues through selling down stakes in companies without losing influence, apparently. What kind of sectors do you expect to see those kind of revenue gains? Are there any sectors off limits for selling down stakes? And how much do you expect to raise through that?
Well, obviously, you know, the French state owns many companies, some of which are listed. So I won't be very talkative on that point. So we are working on it. Obviously, the large public sector companies like La Poste or like EDF are not on the plan, but there are many options, and we will work on it.
Okay. I want to kind of, you know, ultimately, the investor community, I think the initial reaction is not a lot of faith that the trajectory of this budget plan and the government's is much better than it was, you know, 6 months or a year ago. And I think there's a lot of worry about that the government again will kind of struggle to get the budget passed and will kind of suffer on that. But we saw last year the investors move on. Are you more worried about how the investor reaction this time, or do you not think that we're yet at a critical period for investor pressure to kind of really force something to get done?
I'm not worried, but thank you to give me an opportunity to talk to them. I want first to reassure them on the 2025 budget execution. Because, you know, public finance is something which is very operational. We put a budget for this year, cutting the deficit to 5.4%, and we follow the budget execution on a monthly basis. I gather all ministers, general secretary every month, and I can tell you beginning of July, or middle of July, where we are today, that we are totally online in the review of spending. We are on plan on spending. After, I must say, 10 billion cuts that we did in the first quarter and the second quarter. But after those cuts, we are totally online. And on the revenue, whether VAT, income tax, corporate tax, we are also online. So we are monitoring the execution of 2025 very closely. We have a very ambitious target for 2026. I'm confident it will be approved, it will be executed, and that France will put itself back on track, which is absolutely key in order to play our role in Europe and in the world.
Minister, it's Kriti in London. Can you just walk us through the growth numbers here? There's quite a bit of austerity baked into Bayrou's plan. Walk us through the impact on the growth picture for France.
The trajectory for this year is 0.7%, down from where it was initially, of course, because in the meantime we have the tariff war and we have the difficulties in the world. We will revise that number in September, and hopefully we will have by the time an agreement with the Americans on tariff, but we don't know yet, as you know. For next year, the trajectory for growth is to be higher than 1%, maybe 1.2%. We will clarify that also in September, with an inflation which was very subdued in the first half of the year, but for the whole year it will be probably around 1%, 1.2% maybe next year. So we wish we had stronger numbers, but that is the global situation. The positive point is for the sixth consecutive year, we are the most attractive nation in Europe in terms of investment. We have a huge investment on AI, on every type of investment in the Choose France meeting. So, of course, the main target of the government is to work on attractiveness, cutting red tapes to make sure that we work on the growth of the economy in the coming years.
A noble effort, Minister. Talk to us a little bit about the trade point that you made specifically in terms of getting clarity on what that relationship between Europe and the United States looks like. We know in the recent list from retaliation that Brussels has prepared should there be no deal on August 1st. France is notably more exposed than perhaps they hope to be in terms of retaliation on things like drinks that are potentially exported, wine, among others. Walk us through the growth impact of that, should we have no deal between the United States and Europe come August 1st?
Well, first, our key target before August 1st is to reach a deal, and we are not far. Of course, I'm following the negotiation on a daily basis. We are not far. I'm afraid that, of course, it's a decision that will be taken by the 27 member states and the Commission. If we have no deal, and if, as the US threatens us to increase the tariffs on European exports, we will have to retaliate and put ourselves tariffs, and then the impact on growth on both sides of the Atlantic will be negative. But my guess is the size of both economies, the US and the EU, is such that it's a war we cannot afford. So we are striving to get a deal.
Do you think that you have the same view on retaliation as the rest of Europe, Minister? We hear different commentary coming from Germany, for example. Will you find common ground on what retaliation is required?
I'm flying to Berlin right after this interview to align, of course, our vision with our German friends. It's customary in the EU to have a dialogue and a discussion before we make a decision, and I'm sure that jointly we will make the best decision when it comes, that is at the end of the month.
Minister, I want to come back to the conversation around trade, not just with your counterparts across Europe, but your counterparts, of course, in Washington as well. You said you're following the story or following the negotiations very closely. What is the sticking point, you think, when it comes to that relationship?
Well, I think we improved a lot our relationship. I was in Washington as soon as February. We met with President Macron, President Trump. I had a one-on-one with Scott Bessent, the Treasury Secretary. And in the beginning, we had a lot on the plate because we are non-tariffs barriers. We are tax regulations. We had the international policy relationship with Ukraine, with the Middle East. And on many of those aspects, we aligned the position, and you've seen the NATO summit, where also we put our forces together with more investment in Europe and still involvement of the US. So the last subject we have between the US and EU is this tariff issue. I must say we had made progress, but not enough. But looking at all the issues we solved, we have also solved the issue of the revenge tax, which was the section 899 of the big, beautiful bill that has been repealed. So we've cleared the way, and hopefully we'll do the same on tariffs. But I must say, at this day, it's not done yet.